Good morning, welcome to the market view for Wednesday the 21st of May 2014. Just before we start looking at the British pound, I just want to remind you that the first Dow video is up and available within the training video section of the membership part of the website. So log in, go to training videos and you will find it there. In this video, all we detail and look at really is setting up and getting started with trading the Dow. There are a lot more videos to come. I'm going to go into a lot of detail which will be applicable to all markets, but there's some special things about the Dow that help to forecast what it's likely to do that is unavailable for the pound. So that is to come. There's a huge amount to do and information to impart. I'm going to share how the money flows into the markets and out, and how prices move up and down, and more details on using the fibs to predict where the market's going to go. And then ultimately we'll look at the professional money cycle, as I call it, where this incorporates the test bars as well, so you'll be able to read the market bar by bar, but also know the bigger picture from looking at things like the implied volatility chart, which you can get free of charge. I'll show you the website for that. And that is quite something else. That's something I discovered in 1994. The pattern remains the same, and we are on the cusp of a big correction coming into the markets based upon this one thing alone. So I'm going to do my best to get this out to you before we start to see the market move to the downside. And then using this same tool, this implied volatility chart of the Dow, I will show you a technique that has never failed when we get a big correction that you'll be able to see, and also impress your friends with saying that the market shouldn't go any lower now. So we're on the verge of a major correction in the Dow based upon this one tool alone. So not enough hours in the day at the moment to try and compile all of this, and then of course record it, edit it, and get it out to you. So just be patient with me. I'm working on it as fast and as hard as I can to get it out to you. So what I'll probably do is just drip feed little bits and pieces out to you, and probably start with the bigger picture of the market, which we do with the market view, because if you don't know the background of a market, then you can't actually trade it down to smaller time frames. So that's what I'll probably do this week, is show you the background of the market and why I believe the Dow is due for a major correction. So I'll work on that video first, and then at least you'll have that tool at your disposal, even if you're only using the basic things like the PTPs and XXXs to actually trade with at this time. Right, so get set up with the Dow, get the chart up and running, and hopefully I will be able to assist with providing the rest of the information for you as and when I actually get the videos created. It's a shame I couldn't do one long video, but it'd probably be about 5 hours long. So small bits and small steps. So right, let's move on to the British pound, which is barely moving, apart from when we have an economic news item. Yesterday morning we see the pound starting to move lower. Price is trading down to the 168 support, which we spoke about. Crucial level based upon the daily chart. Again, the bigger picture. The market finding support here, no surprise, then reversing and moving back to the upside. This is at 8:30. We've got an hour before the news is released, and I think you can see where the news was released to the market. This was the CPI figures, which came out as forecast. Market used this news to shake out a few of the longs, and then the market traded sideways before trading back up towards the 168.50 level there before mid-afternoon, and then just drifting down slightly before the overnight session took hold. So there's a 14 pip loss in this trade here. I'll mark it up for you just so that you can actually see it. And again, no surprise really, because you've got that whole number there, that 168, which is crucial. So the market just barely filling it. You see there's some selling, and then this is followed by buying coming into the market, and then prices moving to the upside. So let's just mark this one up as well. So you can see there, just before the news, we've got an hour, 8:30, 9:30, and just before the news you can see there's the 20 pips available. Actually, there's more than 20 pips available there, but I think you'd have to be a bit quicker on the trigger because, as we've said before, the CPI figures you don't really want to be in the market for. So 28 pips max there to offset half of the loss there. You didn't get a chance to reduce the loss in this trade. So the pound back in this sideways range. You can see we've only got a 50 pip range again yesterday. We did trade through a bit more, but then came back immediately just on this economic news item. So, you know, it's still a fairly narrow range. Let's have a look at potential profit targets. We can see this sideways range starting to build here. We see the market still struggling with the first target that we've actually put in, which goes from this high to this low, because, as I've said before, and I will elaborate on why I do this in some future videos, which will, of course, include showing you this in the Dow and on the pound, how you can use what I call this rolling fib. It's unique to me, something that I observed, that you didn't have to go from the high down to the low to trade the fibs. You can actually use them in a rolling form. We've got this low in place here, and then we just go back to the next high as we measure how far the market comes back up this way. And if it breaks that 76, then we move to the next high, back down to the low. And all we're doing is measuring the momentum as the market starts to move higher. So back to this high, down to this low, and then if it keeps breaking it, eventually we end up with the recent high down to the recent lows Fibonacci number anyway, or resistance level. But this way it allows you to see where in the shorter term that the resistance is going to be in the market. And really there's not a lot to show in this one. If the market's got any weakness, we could just mark down from, we can see there we've got a high, and if we do the reverse, this is the first low, because this one's the low of this bar is higher than this one. So we could go from here to here, and we can see there we've got the 76 there at 168, which we know from yesterday the first sell signal is a major support level. So should we get any shorts, watch this, because it's also a 76% retracement from this low to this high. But if that is broken, then we come down to the next low to see what we've got to the downside, and we can see we've got 167812, and then the 76% happens to be the support over to the left at 16762, which you can see there. So there they are, the sort of downside targets. We've got this resistance here. Let's just pop one or two just into the top there. We've got the next high as this market moves back up on the left hand side of the chart. You can see there that's where the market stopped yesterday. And let me just move this 62 out of the way. The reason I removed the 62% is because I prefer the 76 as the main, the sort of the ultimate target, really, of where the resistance is going to be. 62 works fine, but if it breaks 62, 76. So 76 is always what I prefer, as you will have noticed. So if that 76 is taken out, then I would just roll back to this bar, down to the low, and all we're measuring is the momentum of the market moving back up in this direction. And what we're looking for are ceilings of resistance that could cause us some problems. And now if you look here, this is also 62% of this bar, whereas it's 76 of this one. So you can see there is a definite pattern that is in the market. It's not just chaos. There is definitely a pattern, and you'll see this as I record the videos, and then you apply it, and you'll see it in real time that you can draw these in, and the market trades to these points. So it gives you that confidence, and also the ability to predict where the market is likely to trade to as well. So I'm going to save this, and let's just have a quick look at the news for today, and I think there's quite a bit today. So we've got the UK, we've got the asset purchase facility. That is a tough one, really. Should you be in the market when this one is released? I don't think it would make too much difference. However, we have got the retail sales at 9:30 this morning as well, which could influence the markets to the upside if the actual comes out as the forecast there at 0.4. So it may be wise just to stand aside on that one this morning. We've got nothing then for the rest of the afternoon, but anybody that's trading the Dow, 7 p.m. this evening, Yellen is going to be speaking, so it would be unwise to be in the Dow at that time, or the pound in fact as well, because we just never know what she's going to come out with, whether she's going to continue with a QE, and if so, then that will drive the markets higher as well. Right, that's it from me today. All things being equal, I will see you in tomorrow's Market View. As ever, thank you for your support and also for watching.